Hello everyone, it's John here again, and we're going to be doing the trades of the past week. That's going to be from July 27th up until July 31st. Now, this was an interesting week because we did have FOMC on Wednesday, and we did have a few, like on Tuesday, we had a 10 a.m. news that used to be red folder back then, but now it's orange folder. As well as, like, for example, on Thursday we did have an 8:30 unemployment claims at 8:30, but it's now orange folder. And you also have Friday, there's the 10 a.m. Consumer sentiment that used to be red folder as well. So it's very interesting how the week played out. But we're going to be going over the trades of the week. So start off with Monday. What we can see here on Monday is, and let's go ahead and follow the protocol, right, guys? It's literally 8:59. What are we doing? We're marking out the nearest gaps, the nearest sell sides, buy sides, and so on. So if we kind of look here on Monday, all right, so we do have a SIBI up here. We have another SIBI right here. We have the new week opening gap combined with this BISI, and we have a low in it right here. I'm not gonna mark out the whole entire thing here. It's quite a bit. It's a really big area, but we'll mark out this sell side right here. And what do we have here? We can see a SIBI forming right there. We can also go ahead and mark out this as buy side and this as well. Not expecting a reversal off of them, more like you want to see them get taken to hit the gap and then do a sell model if that plays out. Or we can see, we can go ahead and short and then go back up. However the case will be. But yeah, so this is basically it for the hourly. Now I'm going to go ahead and show you guys something as well on the 15-minute. What you can actually see here is that there is, in fact, a high right here in advance of a breakaway gap, and this gap below it, it's not fully filled. So let's actually go ahead and mark that out as well. I'm gonna make these make them purple so we can know the difference there. And I'll mark this out and we'll make it specifically like 15-minute buy side. Now, what I did show you guys on the first episode, I know I did say use the 1 hour, but you could use this on the 15-minute as well as the 5-minute. But if you are just learning this stuff, I recommend that you stick to the hourly. Once you feel confident and you trust the model, you can take it down. Because some of the trade examples I'm going to show you here, some of them I've taken and it's off like 5-minute gaps and stuff like that. But I'm showcasing here the hourly and the 15-minute. Just that alone, you can kind of see here the potential for the model, all right, guys? So what we're looking for specifically is you want to see a tap of the 1 hour gap or even take out this swing high. And notice as well, this swing high on the 15-minute is at the low of the hourly gap, which is very, very nice. I love when the algorithm does this. It's just so beautiful. It's like teasing the gap for the hourly. But yeah, essentially that's what we're looking for. Ideally as well, if we're gonna look for shorts, this is also a great target down here. Right there. And yeah, anything else besides that, I think you're overreaching. I mean, quite a bit of points already. But let's go ahead and go down. Oh, first we want to see a tap. Okay, tap, and it took out the high of the 15-minute right there at 9:30, or right in advance of 9:30. And you can see here we also hit the gap right there, the hourly gap. Okay, so let's go ahead and look at 9:30 here. Boom, so we start shorting. We actually go down to the 1 minute here. At this moment in time, what you can see is literally hit the hourly gap. We hit the 15-minute gap. We took out the high. We rejected it. And we have already hit our sell side objective. But let's go ahead and turn on the PO3 ranges here, guys. So if we were, in fact, using one range in this case, you can actually see here, let me put a range above. See here that, like on my previous video, I told you guys the highest you want price to reach is going to be the 27 range. See here, price perfectly hits the 27 range, and what happens is we get this move lower prior to 9:30, which is a very clean move prior to 9:30. Now, I know I did mention that you guys want to see these gaps get hit specifically at 9:30, but if it gets hit a little bit in advance of it, then you can expect 9:30 to continue that move. Yeah, let's go ahead and here you guys can see multiple entry opportunities. If we're looking here, you can kind of see this gap right here, these gaps overlapping. This will be a nice entry point, specifically because it has fractal EQ in it, IRD, and the range X in this case is going to be range high. So it's a very strong gap. We have a clean displacement. Okay, I would take this, and then there you go. That's a perfect sell side engineered right there, right at the range. Perfect. But we'll go back. And let's go ahead and see the 9:30 as well. Going even. So I'm gonna switch it over to the two. Go back to the minute. So obviously, and I'll just like you can see here the new week opening gap down here, and what you want to focus on is going to be the point. Well, that would be a next objective is going to be 403. 50% of the, and if price gets crazy, obviously do have the previous week low right there resting at the 2 low. So let's go back to the 1 minute as well and take a look at what we buy real quick. Right, so yeah, right there you do have a clean 5 minute gap right here. You see as price hits the 2 for 3 low, it hits the gap and then it starts the price delivery model one more time. Back to the 1 minute. Mark this out as 5 maybe. And by the way, guys, if you guys don't know this already, uh, Silver Bullet ICT teaches is gonna be when price retraces to the first 5 minute gap. After that, then you can expect price to expand. That's your Silver Bullet gap, by the way. You can use this as a POI. Very simple. Okay, so we'll go a little bit lower. Seconds. So like I mentioned, we still do have the 50% gap. Which determining how price hits this, we can determine if it's going to go lower or not. But what we can see here is we retrace, we hit the highest point that we want price to hit for the price delivery model, and we can see prices start expanding lower and lower. And there it hits our objective previous week low. So this case, the first entry, like I told you guys, we're looking for is going to be at the fractal EQ. However, this case you can see here the price do distort a little bit over it. Not ideal. After that, you'll be looking for an entry at the range high, which we don't really get a clean entry per se, but we do get this there, tap right there. So we can use this low as a breaker. Price will just continue to reflect it right there. For the fractal EQ, we're looking for a gap here or some sort of entry, and you can right there. This would be your fractal EQ gap, and this would be your range 81 gap. Fractal gap. The thing is that price is distorted at this point. Reason being is because we should have started this at the range high. I taught you guys that with PO3 ranges, the highest is here. Think of this as an extended external range demarker. That's what it'll be, external range demarker, but extended up to here. Reason being is because price is not perfect. So in this case, since price is not perfect, we should have formed everything at range high. You see here we are going above it. So we are giving price some space, to do its thing. That's why we have extended ERD. That's why I use this. But due to that reason, the gaps might not be perfectly aligned. And there's going to be times where it's super perfect that you just can't believe your eyes. And it's so beautiful. Telling you guys. But yeah, this is the distorted gap. Anything below, we don't care. Remember, guys, we're not entering below EQ if we're selling. We always want to enter above EQ. Yeah, guys, this is going to be the trade for Monday. Very clean. I can't lie to you guys. I actually do like this trade. I like the whole trade from the beginning as well. We'll go back to the 1 minute. So you guys can clearly see. Oh, prior right there. Prior to 9:30, we hit the gap at 9:01, take out the high, and then we start the whole sell model. Very, very clean. Yeah, we'll go over the other example as well. And I want to just throw this in again. Look at the 15-minute guy. This is exactly what I'm talking about, guys. Takes out high in the gap, rejecting that. Okay, that's perfect. Yeah, we're gonna go ahead and look for Tuesday. And we'll go to the hourly. Now, if we are looking at Tuesday, what I can tell you guys is that there is actually no trade on Tuesday, guys. If you traded Tuesday, you know, and you're following my videos, you are not following what I'm teaching, what I'm showcasing. There was no trade on Tuesday, guys. I don't care. There was no trade. Go and look at it together. But I'll show you guys there's no trade. As far as it goes, there's not really hourly gaps until who knows when. I'm not gonna look at that. That's too far away. Due to like if the data ranges, but I won't get too deep into that. But we're just referring to this. We can clearly see there is like an hourly gap right there, very small. There is the gap here. And there is a high, like I said, like if price takes out that high, we can still see it work, but it's just not my favorite. I wouldn't trade this. Ideally, I want to trade at 9. I want to see something happen at 9, and honestly, 9 o'clock just straight dumps. You're like, oh, John, what about the 15-minute? Oh, well, let's look at the 15-minute then, prior to 9, right? See here is that there is nothing. There is absolutely nothing. Oh, there's a gap right here. No, John, because here's the thing. We would have wanted it to take out the side. The only way this is valid if there is SMT here, but I'm not teaching you guys that right now. So we're not using that, guys. We're gonna just disregard that completely. This trade not valid. There's no sweep of liquidity, so we are not trading it. Oh, 5-minute. We are not going to trade the 5-minute. Sure. No, it is valid on the 5-minute. I'm not gonna lie to you guys, but we are not trading the 5-minute on this day. Most of you guys need to understand that a no trade day is a no trade day. Don't force a setup. If you already don't feel good with the hourly and the 15-minute, then like just don't go down. If it's very clear, like for example, on Monday we had the hourly gap, and you also see how fractalized it is that the 15-minute also has it. That's very, very clean, guys. I don't care if this hit range high. I don't care what it did. We are not trading Tuesday because it is not valid, guys. Okay, we're gonna go ahead and take a look at Wednesday. Now, Wednesday was FOMC per my protocol. I don't trade the morning, but there was a clean morning short. All right, and I'm gonna showcase it to you guys. Now, there in the morning on the hourly, this case, there was nothing. Like nearby as far as it goes. Like we can say this gap right here. We can say this high right here. We can even say this high right there. Prior to 9, delete this. We can see here we do have this low right there, and we have another low right here. Now, you notice here on the 15-minute, prior to 9:30, you can see here My bad, I played so fast. But you can see here we do have these two gaps right here, right? Mark them like as one 15-minute gap, and you can see prior to 9:30. Oh, this is the 9:30 candle, but I want you guys to see this. We did form a swing high inside the gap. Here, this is buy side. Now, I told you guys that I don't want to see it close all the way up here. If it wicks like this, that's fine. It just needs to body close back below it, the liquidity, ideally also below the gap. The candle doesn't have to be bearish. That'd be very nice sign though as well. So yeah, what we can see there, and we also have like a quick 15-minute target right here and right here. You know, those are nice because they're in the gaps as well in advance of a breakaway gap here. And you also have 35.75. Okay, so this didn't even tap. This is actually teasing this gap right here. But yeah, as soon as price takes us out and you see us closing like that, or even just then taking it out at 9:30, then you go down to the 1 minute, start looking for your entry model. If you don't see your entry model, then you go down to the 50-second. And there's going to be a video on entry model specifically very soon. For me, the entry model is going to be simple. It's going to be right here without even looking at ranges or nothing like that. Reason being, we use this gap and take out this high right here. And once that occurs, that to me is a sign that the algorithm is switching to sell program. So yeah, right there, we use that to take out the high. So I would enter right here on this wick if I was going to be trading the morning, and we'll slowly watch it play out. So yeah, what you guys can see there, it's a very nice sell model. We also do have the CSD right here. See the last two up close candles, that becomes your bearish order block, your first initial sign that the algorithm is switching to the Excel program as well. So you have there as CSD, and yeah, you guys can see there. We'll turn on the ranges for this case. What you can see here is this is actually going to be a no PO3 range necessary for this trade. Now, even if it does keep shorting, this case, you can see here, we kind of do the full price delivery model that I showed you guys, the first one. But it's not necessary for this trade. Not necessary. You don't even need the PO3 ranges there, but they're like an extra confluence. And we're going to get more into that in the future when I explain to you guys the different models for the PO3 ranges and so on. But yeah, looking at it, you guys can really see here that there is actually entries that I showed you guys, the gaps and everything is all there. That would be the trade for Wednesday in the morning, but we don't trade it due to FOMC. When there's a two-stage FOMC, I wait for like 2:30, around 2:15 to 30, I'm marking out my gaps. So we're actually gonna go over to the FOMC time. 12, 13, 14. Perfect. So now, if we're kind of looking at the 1 hour here, guys, there's not really, how would I say, not really a clean model per se here, right? But if we go down 15-minute time, I want to show you guys something that I didn't mention this in the first video because I want you guys to specifically focus on the ones that I showed you, but this is going to be one of the advanced POIs. It's when we have a fair value gap that's been inverted. And what you want to see is you want to see a swing high form inside of that version for value gap. And now this swing high, you would want it to basically not fully fill the gap. And then you want to see the same thing, but it's going to be based off an inversion gap. So we'll go ahead and mark that out right here. And you guys can see here that we get a very, very clean rejection off of the high. And then we get the sell model that we're looking for. Hold on to the 1 minute. And show you guys playing out. So with this whole trade at FOMC, you can really see here on the 1 minute, not really how I would say very clean entry besides obviously you have this gap right here that was utilized. But besides that, there's not really anything super clean on the 1 minute. But we're gonna look at the PO3 ranges here real quick. And specifically, I'm gonna go ahead and stop it right here. And what I want you to understand here is that this is the 15-minute buy side that we had marked out. And what you'll notice here is we actually do have a sell side right here, perfectly lined up at the range low. Now, just so you guys know, this is going to be the price delivery model, a different one. Because if you notice, we actually do reverse off of EQ. But we're going to save this for a whole other video. I don't want to give you guys all the models right away because you guys are going to go crazy and you guys are not going to properly learn each model. So focus is going to be on the first model, but I wanted to show you guys that it was in play here. All right. And we go down to the 15 seconds. You can see here exactly what's going on. Price, see here, we do have a fractal EQ gap. I'm not showing you guys the model, how it should function properly, and all that stuff, but I'm just going to show you guys the gaps. You know, have here a clear gap right here. If you notice, there's actually a volume imbalance, so we put that together. And this is a very clear. But no, yeah, I mean, this is literally the trade from FOMC. Very clean. It's off of what I've shown you guys. You know, it's all there on the 15-minute. Yeah, and I do want to clarify something as well. When it comes down, like I'm over here on I was on the 1 hour and I said, hey, like there's nothing here that looks like clean. In the sense being that like 14 o'clock is done manipulating and it didn't take out this high right here, for example. And I would have wanted it to take out this high because it has this gap. But to me that wasn't very clean that it didn't do that. Therefore, like, you know, on the 15-minute, I do have this hidden POI, IFVG with a swing point in it. That's like literally like perfect. But yeah, guys, we're gonna also look at now on Thursday. So go ahead and see here the 1 hour. And all right, okay. I'm gonna go to Thursday. 9 a.m. Perfect. And with the whole thing on Thursday, we're gonna be looking at specifically, how would I say? Okay. For 9 a.m. on the 1 hour, we would say that this is a nice draw right here, this high, buy side. Have the gap here, and we also have this lower gap. Now, remember guys, we are not shorting this gap unless it takes out this high right here, or we're not shorting this gap unless we tap into it. But in this case, if we actually go and delete the clock handle real quick, I want to go and show you guys the fractality of this stuff. We go to the 15-minute. You know, we do hit a 15-minute gap here, but you know, it could have gone down here and so on. Like, I'm going to give you guys some precision ass stuff right now. Go to the 5-minute. Now, this might be a little bit too much for some of you, but once you understand the concepts, you'll definitely see as clear as I am. See, have here a low inside the 5 minutes, not fully gapped prior to 9:30. What happens? 9:30 comes down, rejects it, and it starts to hold buy model. All right, guys, we're gonna go ahead and go to the 15-second here. The 1 minute doesn't really have any clear retracement, so we would go down to second. And we'll go ahead and turn on the PO3 ranges. And what you can see here, this reversal is also off of EQ. But Nonetheless, guys, you know, when I teach you guys all the price delivery models, you guys will understand every reversal and how it plays out. But until then, just focus on just range X to range X, okay? Okay, guys, you can clearly see here, we do have, with this model, by the way, guys, there's going to be the regular model inside of it. So you can even see right here, back to a Q gap right there, and price just. But yeah, this was off of a 5-minute sweep and a 5-minute gap. Now, I'm not telling you guys go and just look at the 5-minute. No, you want to practice this on the hourly. When you feel comfortable, take it down a little bit. And not every day it's going to be 5-minute or 15-minute or 1 hour. It's always going to be one of the two, one of the three. Try to mainly stick to 1 hour or 15-minute. And once you really, really have it down, you can try it out on the 5-minute as well, but it needs to be very clear. I constantly just look around. I'm always switching time frames and seeing what's going on. I have another monitor, two other monitors actually, and I'd be looking at each one, just trying to see what's going on, because I don't always mark out everything. I visualize it and I just wait to see what happens. But we're also going to look back at the 1 hour, because what I want you guys to notice off the ranges is that, all right, 930 didn't really reach any of our hourly POIs, right? Thing like that. Oh, we did take out this high. Yeah, but nothing major. No gap. Right? So what we notice is that 10 o'clock candle closes and we make a 1 hour gap right here. I actually called this out in the chat. I said, I want to see price hit any of these 1 hour gaps and go back up. So what we see here is that 11 o'clock taps in here. And right after that, you can see the buy model start to form. Boom. Right there. Go down to the 1 minute. It took a while to deliver, literally at 3:10. Price finished delivering. It's not the cleanest reversal, but it's there. Go ahead and turn on the PO3 ranges. And this is actually, you guys look at my one of my videos, I call it the reset. This is kind of a reset model, by the way, guys, but not gonna go too deep into it. But very clear, very clear here. As soon as price breaks this gap right here, these gaps, you can clearly see perfectly respecting it, and then we start flying away. This would have been a very clear trade to take on Thursday. Just waiting for that hourly. Basically, what we're seeing here is 9 o'clock distributes, 10 o'clock just retraces, 11 o'clock creates a second SMR for a continuation, and then PM just full trending towards this direction as the 9 o'clock, 9:30 candle. Very, very clean. And we did have one more trade. Well, we actually have two more trades, and these happened on Friday. Go ahead and show that here. Okay. Okay, perfect. So on Friday, you can see here, this is the 9 o'clock candle, but what you can see here is price goes and taps 1 hour gap that had a buy side in it right there. Once price done this, we're looking for shorts. Go down to the 1 minute. Nothing too clear. Turn on the PO3 ranges, and you can see here a nice 2 for 3 high, 2 for 3 low. I'm actually going to go ahead and cut it off right there. So we're in that range. This would be your target. We go down to the 15, get more structure. If you go down to the 15, 5-second, you get more structure as well. But you can clearly see here that once price broke these two gaps right here, the, how would I say, the algorithm completely flipped to bearish. There, you have here your fractal EQ for value gap. Have a few entries right here at the 81 range. Right here, you have a gap, very clean. Yeah, that's literally it right there. This is very clean. It takes out the high in a gap on the 1 hour, and we get a very nice reversal. Now, I did take a trade. Took a trade on Thursday. I believe, let me double check real quick. Yeah, I took a trade on Thursday and I took a trade on Friday. So I'm gonna showcase to you guys real quickly my trade from Friday. So I actually caught this going lower. So what I did is I actually waited for the top of the 5-minute gap, the silver bullet. Go ahead and turn off the ring real quick. So you can see here a 5-minute gap forms right here. Price goes and taps into it. You go down to the 15-second. See is that you actually have a buy side right here. And now, what's so special about this buy side? It's literally engineered right in the gap. Perfect. So turn on the ranges. I'll show you guys my trade as well here in a second. I actually gone and entered right here at 10 o'clock and 45 seconds. So if not, it's going to be the 10:01 candle. And I took it down to right here, fractal EQ. I would have held for lower, but I was content with enough already at this point. But yeah, I'm gonna go ahead and show you guys the trade right now. By copying it. Okay, so it's not letting me put that there. I'll just go ahead and throw it into the video and I'll let you guys see it. But the entry I used on this trade is literally going to be the fractal entry 81, and there's also your IFVG there. And I also did take a trade on Thursday. I took a continuation back to Thursday. Where I had buy side marked out right here as the Wednesday high. And if we go down to the 15-second, and I took this trade because I told you guys that on the 5-minute, there was a sweep right here. And there was a 5-minute BISI. We go back down to the 15-second. And we look at the three ranges. I know the model that we're playing. I actually got in around here, around the 81 range fractal, and I just got out right here at 951. Simple. I know it's going to draw higher, even though I don't have the liquidity marked. I know it's going to go higher because we have to complete the price delivery model. But yeah, guys, I really hope you guys enjoyed the trade of the week here. And I will show my executions and right after I explain the trades. But yeah, I really hope you guys enjoy this. If you guys have any questions or anything like that, just let me know. Hit me up on the Discord, leave comments on YouTube, whatever you guys would prefer. But yeah, stay safe, guys. I hope you guys have a good trading week for this upcoming week, and peace out.